Hello and welcome. You're watching Business Today Television. I'm Tanya Nija and this is Market Today. And let's take a look at the markets at this point in time. Clearly, markets are volatile after the RBI policy outcome, and it's the incremental CRR thing that is not really working well for the markets. 19,534 is the level where we are at currently, 98 points down on Nifty. Sensex also 332 points lower at 65,658. Specifically, if you see, it's the banking pack that is dragging the markets at this point in time. But now it is important to note that which are the levels you should watch out for going forward. And for that, let's welcome our guest on the show today. We have with us Mr. Akshay Bhagwat, who is the Senior VP of Derivative Research at JM Financial. Thank you so much, Akshay, for taking the time out and joining us here on Business Today Television. Clearly, markets are volatile. Profit booking, taking place at this point in time. Sensex even lost around 400 points. But what's really next for Indian markets, and which are the levels one should watch out for going forward?
Good afternoon, Tanya, and thanks for having me on the show. Well, if you look at Nifty last 4 or 5 days, time and again we are seeing Nifty resisting at the levels of 19,600. So although the 19,600 level is proving like a magnet where the prices are getting sucked to this 19,600 level, but there is the key level which should surpass. So we are looking at 19,700 to be crossed for any possible reversal sign in the market. But as the things go right now, we feel that we are at a key resistance. Nifty has seen selling intentions from the levels of 19,600, which is a very key resistance if you were to look from a short-term trading perspective. The idea is that the recent lows which the Nifty tested was 19,300. The doors are open for the lows of 19,300 to be tested, and this view would hold for if looking at the current market situations. And your stop loss on the short position should be around 19,650 if you are playing a short for a trading perspective. So this is more of a trading view which we hold for 4 to 5 days. It doesn't mean that there is going to be a major slide in Nifty. Broader view is we are looking at more of a range bound scenario for the month of August. The lower end of the range might be around 19,200. That's the possibly the worst case scenario which we look at as the current data reading goes. And then the upper end 19,700 is the key resistance zone for the Nifty index. If you were to look at the bank index now, bank index also 45,000 is a very key resistance from where time and again we are seeing some bit of selling pressure. Strong presence of call writing is seen at 45,000 strike for the coming weekly expiry, which is the 17th August weekly expiry. So unless and until 45,000 is surpassed, we would advise our viewers to go light a bit on their long positions. Let the levels cross 45,000, then you can go for a buy bet if you are keen on the buy side of trade. If you were to look at dips, then the recent low of around 44,200 is the point where you can attempt to go long on the bank Nifty again. So 44,200 on the lower end, that's your buy point, or above 45,000. Till then, in between, it's more of a no trade zone, or if you are keen on shorting, you can play for small trades on the lower end, which can be 44,300 or 400 in the on the downside in the next 3 to 4 trading sessions.
Okay, and also Akshay, what would be your top bets if you talk about, especially after the RBI policy? Any short term bets that our viewers can bet on?
Look, in the banking space, I am tracking Indian Bank. Now, Indian Bank had given a strong technical breakout a couple of trading sessions back. Now, this breakout was seen at the levels of 339. That places it in a very strong, firm footing for this bank. The technical parameters are very positive. Last couple of days, you are getting a re-entry because prices have kind of just cooled down a bit around the 375 mark. So you can look to buy Indian Bank at the current levels. Your stop loss will be below the breakout zone, which is around 340, and the momentum can easily see you around 425 to 450 with a 1 month time frame holding. That's one bank you can have on your radar. The other bank which we like would be a CSB bank, a Catholic Syrian bank. So this bank also has a very firm technical setup on the charts. It's kind of consolidating around 306 right now, but as the broader chart trading goes, there is a very firm support at the level of 290. We believe this bank also has still more momentum or steam left on the upside, where easily levels of 325 or 330 can be seen in 1 to 1.5 months time frame. So you can buy this for trading perspective or a medium term perspective with a stop loss placed below 245 for a target of 325 to 340.
Okay, Indian Bank and CSB Bank, these are the bets that are coming in. And also, apart from bank, Akshay, if you see pharma sector, pharma stocks have been buzzing of late. And today, if we see, there's this bit of a, profit booking that is taking place in this sector, and some stocks are, down to the tune of 3 to 6%. Look at Biocon, look at Granules, Laurus Labs, Glenmark, all these stocks trading in the red, down 2 to 6%. So what are your thoughts on pharma space, and any bets that you like? I mean, is it really a good time to step in, because we have seen a stellar rally, especially after the Q1 earnings?
Exactly, Tanya. The pharma space has been in limelight recently. One-way rally, no stopping it. Really, it's a question whether you should enter here or not. My reading says that it's too stretched or overstretched at beyond a point, and I would wait for some cool off in the prices, given the strong momentum the pharma had, or the strong run which it had in the recent times. So let's wait for a cool off in the pharma space. Let maybe a 2 to 3 odd correction from the current zone just sets up the charts well for taking a buy trade again on the upside. So I would say let's wait out a bit for the time being in the pharma space. Our top bets in the pharma space, considering the broader setups, would be Sun Pharma, Cipla, and Biocon.
Okay, and let's pull up some FMCG counters as well. Marico, ITC, Britannia, these are also down to the tune of 2%. Akshay, the slowdown is pretty evident, and the Q1 numbers were not that impressive too. So, I mean, one should really approach these stocks right now after the correction that we have seen, or one should stay away from this particular pack.
Yeah, really, I'm surprised that FMCG still has not regained momentum, because the defensives like the pharma space has done well, especially when the markets are on a slippery ground. I would have expected FMCG to do well, but surprisingly, till now, at least on the derivatives front or the technical front, there is not much action or momentum in any of the FMCG space. So here in this space, I would only like Marico here, because Marico had staged a breakout few trading sessions back at the level of around 560, 570 odd levels. So that's one stock which comes on my radar on the buy side, because as a trader, it's very important. You need momentum to be with you. So right now, we will keep the FMCG space on a wait and watch approach. Stocks still are laggards. They are not keeping pace with the trend the sectoral indices are in. So Marico is the only stock which comes to my name, going by the strong setup this stock has. It is trading around 577 with a breakout seen at 553. That just puts it on a strong footing with a target area of around 625 on the upside. This can be bought for trading gains with a 15 to 20-day perspective.
Okay, and lastly, Akshay, any top bets from small and mid cap space? Because we have seen a stellar rally when it comes to defense, railway stocks, some PSU counters as well. We have seen a stellar rally in the broader markets. So, any top bets that you would like to recommend from the broader markets?
Yeah, look, from these spaces, I think Zomato, one stock which is more of a darling of the retail participants, you can say, because this stock was in fancy lately. It's staged a stellar run right from 48 to 100, has been a one-way rally. The results have been good. Obviously, some bit of profit taking is on right now at the levels of 100, but I feel you would get a re-entry in this stock again around 90 or 87 would be the levels. In case you get a dip, I would be very keen on buying at those levels with a stop loss below 70 for a target of around 120. So Zomato would be on my buy list the way the chart structure is.
Okay, keep an eye out on Zomato then. And on that wonderful note, thank you so much, Akshay, for taking the time out and sharing these picks with us. So, on that note, it's time for me and my team to wrap up this edition. So, if you look at the markets at this point in time, they're still in the red, and 82 points lower on Nifty and 290 points still downtick there on Sensex 65,706. Let's see how the action pans out going forward. But with that, let's wrap up this show. Stay tuned for all the latest market updates, and thanks for watching.